Greetings, everybody. This is Jeff Scott, and welcome to this week's edition of my top-down review. For those who are new to me, I do this on mostly a weekly basis. I'm an unpaid volunteer. I have nothing to sell you, so there's nothing hidden at the end. I support, as a volunteer, the HGSI program by demonstrating how to use it, and I post these webinars or videos, sometimes they're live webinars, in that realm. If you're watching this on YouTube, please hit subscribe, and that way you'll get notifications. I do not have an email list. Why would I want one if I'm not going to sell you anything? And in addition, if you can hit the up thumb, I'd appreciate that, as more people will get this served up in their YouTube, I guess, potluck category. Again, my name is Jeffrey Scott, and my email address is hgsidoc@gmail.com. I titled today Irrational Exuberance. For those that have been around, like me, for some time, you remember when a former Fed head talked about that in response to the markets, and the markets, of course, immediately rolled over. Hopefully, we don't see that outcome at this time. I always start with a PowerPoint, but the PowerPoint was made today. And it's just so as I jump between a lot of different programs, it's a way of making my time more efficient, so this will be an hour instead of 3 hours. As always, this is for educational purposes only. I am a doctor, not a broker. I am independent. I pay for the tools that I use. I am not a professional. I am just an unpaid volunteer, and I have paid for the tools that I use. And it's important that you recognize and take responsibility, because trading involves risk, and you alone are solely responsible for any investment decisions you make. I always title my education, Be Your Own Guru, and I'll show you even more reasons for this near the end today. But these are some of the folks that I've learned from. First thing I tell everybody to do is to read How to Make Money in Stocks by William O'Neill, just to get a flavor of what a growth stock investor is. And it's got some great fundamental and foundational teachings. Morales and Katcher, the O'Neill disciples, ex-money managers for O'Neill, came up with additional signals, pocket pivots, Bible gap-ups, and their own philosophy of trading. Ian Woodward, who I learned so much from, we lost him several years ago. He really taught me how to trade, or at least how to find stocks that were working. John Person, who's now my friend, but I was one of his early customers buying his TradeStation package and his Genesis package, and been to a number of his education programs, and took it from a list of stocks that I got from Ian and O'Neill and taught me how to trade them and make money with them. Sagar with his great Q tools, Van Tharp, position size money management, my good buddy George Lee, who we lost about a year ago, such a great trader and friend, and someone I share the podium with. And then I put this here just because I find this guy's weekend videos to be as useful as any I paid for or get for free on the web. Chivaco Capital Management, CCM, just look for it on YouTube. The guy's a genius. Him and his wife run some money in Atlanta, and he's just got a great trading mind and philosophy and really historical perspective. I own a lot of programs, but I spend most of my time in TradeStation or Thinkorswim. I have a number of indicator sets that matter, the John Person sets, the Q tools, and the Dr. K tools. Somebody sent me a note today commenting on how valuable they found the Dr. K tools, and I'm always happy to hear that. HGSI, that's my go-to for analysis. It does it for you. The filters and views can serve up great stocks without you doing anything except clicking your mouse. And I always like to call out my neighbor, Kathy, who who's had money managed for a long time and dabbled and started using HGSI this year. And, this is sort of I think almost the Robin Hood mentality. My son has the same mentality after being in the market this year. And Kathy wants to beat the NASDAQ every year by 10%, and then she'll feel like she had a good year. And she did that this year. She was up over 50%. And you ask her how much work she does and homework she does besides my videos, and she looks at charts and she looks at the IBD top 50 list, or the the top 50 list, not IBD, the HGSI. I'll show you how to find that. And that's what she trades from. And she's just done phenomenal. I think part of it is the year. And again, I'm going to have some slides later just to let folks who think that this is normal, put their feet on the ground a little bit. I mentioned the Dr. K tools. Often I'll get asked by folks if they could do something with me as a webinar, and they offer to pay me for when you buy stuff. I have no interest in taking your money. I've got plenty of my own. So anytime they offer me a fee, I tell them to give it to you as an additional discount. And this is just education. Here's the website for HGSI. I have no financial or control of this. Free 30-day trial, no credit cards. Believe me, if it was my product, I'd make you give me your credit card because a better chance you'd stick around. And under investing strategies, you'll see hundreds of movies, many of them by me, of how to use the product and how to trade the markets. Stock patterns are cyclical, and my God, this is so hard. It's not usually this hard. Usually you know if you're in an uptrend or a downtrend, you want to ride those long trends as long as you can, and you want to be in the right direction. But every time you think it's over, Monday, this market sold off hard. I lost, I hate to tell you, my wife's asleep. Early on, around lunchtime on Monday, I think I was down $500,000 in my portfolio. Now I started the year with $3 million. And you may, if you listened last week, you'll see that I had taken a lot of puts on a lot of my positions, but I was still down a lot with that. Yet I finished the week up $500,000. So what a crazy week that was. So was this just a short scare and we're going on to new highs? Clearly, that's how it's been and that's how it feels. Eventually, it's going to stop. So I am very long right now. On Friday, with the little sell-off that we had, I bought what I call lotto options. Options that are close to the money, but they're out of the money, 1 week duration, so they expire on Friday. And I buy a crap load of them because if the market goes the wrong way, they pay off really well. So I bought SQQQ, TZA, and VXX. I bought calls in all of them. They're all relatively cheap options, which says the market's probably not going to go down. But that's how I protect myself. In addition, I still have some short calls that are mostly out of the money and some long puts to protect my big positions, especially those that I want to take cash out of the market. I took some out on Monday, but I'd rather take it out at highs, not at pullbacks. If we look at the markets on Friday, and Friday I made a lot of money, but the markets were okay. They were great if you were the NASDAQ, up 1.5%, but the Russell was actually down. You can see the Russell futures closed down 0.11%. Mid caps were down as well. The Dow and the S&P eked out small gains on the day. Now, if you look at the stocks in the S&P 500s broken down by sectors, I got a few extras in the real estate. You can get a sense here, materials 50-50, energy mostly down, financials mostly down, industrials mostly down, staples 50-50, technology I think mostly up. It looks like a lot here, but there's a bunch of positive ones. Discretionaries 50-50, utilities maybe a little bit up, healthcare up, communications up, real estate mostly up, and the foreign markets were up as well. Now, I'll jump into Thinkorswim and look at this. I think you can see it even better, but I always am following the futures because it tells me a story of what's happened, not just during market hours, but almost a 24-hour look. So let's open this up and see what we've got here. Start with the S&P futures, the ES, and you could see how we have ran up off of the bottom of the year, which was lovely March 23rd. You notice that the high of the year, in the last 12 months rather, because it's a brand new year, the high this year, but the last 12 is 38.2450, and we closed right off of that on Friday. So closing near the highs is a bullish thing. Big run up, sideways move for September, October, November, new uptrend, and then we were slowing down at the 23.6% extension, so 123.6, and here was a trend line resistance. But guess what? We broke out of those this week. Is the next target the 128% or 138% retracement? Kind of looks like it to me, but we shall see. Big run. Is that a bullish or bearish pattern? Got price above the 17, above the 50, and above the 200 in the right order. And the only reason why I wouldn't be jumping up and down and pounding everything bullish is we've come a long way. And we're starting to get extended. Well, not started. We're just getting more extended. Let's look at the NASDAQ futures. Big run off the bottom. This is the low of the year. Again, probably on March 23rd. High of the year set on Friday on the NASDAQ futures and and finishing right off the actually 31, 123. Yeah, 2 points off the all-time highs. Again, markets are going to fall eventually, and you always have an all-time high before the markets fall. But you know, how bearish can you be at an all-time high? And plus, you notice this little green arrow here on the E-minis, which I forgot to point out. Oh, it's in it. Never mind, it's not sitting there. It was over here. E-minis in a buy signal. We got a fresh buy signal came in on Thursday on the NASDAQ futures. On the Dow futures, again, similar pattern, really taken off. High of the year set on the last 12 months, or all-time, actually, for all three of these, set on Friday. Also very strong. The Russell had a flat day, minus 0.11 down. During the day, it pulled back quite a bit, but it closed where it opened, sort of a gravestone-looking doji. We'll see if that's the beginning of the end or if that's just a pause to refresh at higher highs. On Wednesday, it had a new buy signal. Now, what's not strong is the VIX, and not a shocker. If the markets are super strong, then you'd expect the VIX to be weak, and you could see you had a sell signal come in. Now, at a close of about 22.8, we are still substantially above the 15-18 range where we were living prior to the February highs and subsequent sell-off. So still some volatility here. And then if I look at the dollar, which has been super weak, the last couple of weeks we talked about, it felt like it was going, or last couple of days, and the last week, reversals, and we did get a person buy signal. It's got a long ways to go to recover, but perhaps some strengthening in the dollar here, which maybe is why we saw some sell-off in the small stocks, especially on Friday. On the weekly charts, similar patterns. As you could see, this is not a normal recovery, and we're starting to go a little bit more vertical on each of these. So it'll be interesting to see whether or not we're getting near the end of this run. Rates, they rocketed. Both the 10 years, 30 years shot straight up, and we're still so low that rising rates, to me, maybe are signs of stimulus and the economy having a chance to get better, and not something that worries me. And with Janet coming over to take Treasury, with Jay in the Fed, quantitative easing and more free money seems to be in the cards, which will support the markets, and perhaps they're why the markets continue to do well. If I look at small stocks or small to medium stocks, the Russell 2000, large cap stocks, the Russell 1000, I look at their individual IWB and IWM ETFs, and in white, their individual AD lines. You could see we have stocks and AD lines at all-time highs. If I look at the NYSE, all-time high on the AD line. If I look at the major market ETFs, you could see them listed here, all of them near all-time or at all-time highs. The only thing that's selling off in that circle is the bonds. No shocker. If your rates look like this, your bonds look like that coming back here, which is this light blue. I look at stocks above the 200 days and stock above their 400-day smooth moving averages, simple moving averages rather, and they're both high, multi-year high type levels. They haven't changed much week over week. If anything, the 40-day came down a little bit after Monday's performance. The 3-month new high, new low, which is a very short-term indicator of extension. We're near the top and we can reverse here, but we're not at a point that says we're reversing on Monday. I think that's important. I think I say it later, but markets that are extended by math have a tendency to get even more extended before they roll over. If we look at McClellan oscillators, summation indexes, I look for 3 things here as taught by John Person. Extreme readings on oscillator or summation index. Nope, this is the daily. Do I have divergence? I've had divergence forever. We started going up, but here we have higher highs and not higher highs on the summation index nor on the oscillator. Zero line rejects, nope. On the weekly, we did have a zero line reject. That might be bullish, but again, we still got some divergences at play. The buckets, now I'm using EdgeRater. If I take all the stocks in the S&P 1500, and I recalculated all these lists on January 1st of 2021, so they're up to date. And I look at within their Bollinger Bands, on the right side, how many are above the midline of the bands and how many are below. And you could see 82% of the stocks are above the midline of their Bollinger Bands. That is bullish, very bullish. What might be concerning is that over 25% of the stocks in the S&P 1500 are not only above the midline of their Bollinger Bands, but they are also above the upper band. So since 95% of the time you're going to stay within those Bollinger Bands, when that much of the market is above the bands, you'd expect some sideways movement or a pullback is imminent. Again, it can get worse before that happens. The Hindenburg omen is sort of folklore of signals that occur before every major market correction. They do. Problem is they can occur when there's not a major correction. And you could see this line here is black or empty. So there's not been an Hindi since September 10th or 11th, and therefore not a concern right now. What might be a concern is we're at 15.9%, 16% of stocks are at new highs on the NASDAQ, and anywhere between 19 and 13, 14% on the NYSE. Again, a market that's had a historical, remarkable run and showing that it's getting extended. Market tone. Now, the good news is not just that the Woody indicator is all green here, so 2 or 3 days of very nice bullishness after some chop, but the high volatility that we've seen throughout this year seems to have worked its way out of the market. That is bullish. Now, I like to always look at what happened this past week. I want to know how my stuff compares, but I also want to know what's working in the market. Now, my portfolio is a high growth stock portfolio, and therefore when I see on things, various boards, when people are saying that the growth isn't working for them, it's probably not a great day for me either. But this week was a great week for growth, notwithstanding what happened on Monday. So every weekend, I basically take a copy of the HGSI database, a static copy. And then I can test that anytime in the future and ask what would have happened based upon certain parameters. One of the things that Ian taught us is ERG, which is a combination of EPS rank plus relative strength rank plus group rank. Each of those ranges from 0 to 99. So that means they could be as high as 297. And then here on the big chart, we're looking at the return in the last 7 days, 5 trading days, based upon ERG. Now, I always eliminate the first 3 dots because there's so few stocks at the bottom or the top. All right, but if I just look at this group in here, I see a range between 3 and 10% where high ERG stocks did better. Hence, we'll talk about on the right, it was a great week for growth. Now, earnings didn't seem to be that important as return was the same regardless of EPS rank. But this was a high relative strength week. And if you're a growth stock investor, you love high relative strength rank stocks and when high relative strength is leading. And you could see the best returns were those stocks with high relative strength, and the stronger group rank mattered as well. Now, interestingly, Stocks that were distributing the prior week actually had a good week as well. In HGSI, I run what's called a group performance analysis, and I looked close to close. Now, there was no open on Friday the 1st, so it would have been the same. Between Friday the 1st and Friday the 8th, measuring close to close, what was performance in the market. Now, these are groups, and you can see the dates here, 12/31, 12/31. These are end of the week, last week groups. Again, there was no trading day on the 1st. And first thing I look at is, or what I have here is I bought equal number of shares for investment of $1,000 per group. Again, starting price is the closing price on that on the first day. Ending price is the closing price. And these are these pre-chosen groups. Now, the first thing I want to point out is this is a standard group that's done automatically for you. High relative strength, raw group rank combo. These are some of the leaders in HGSI. Out of 100 stocks, there were 95 winners, and the average, the percent change was 19.05. Wowzer. All right, and you didn't have to do anything if you knew where to look at them. If we look at the S&P 500, it had a great week. It was up 3.38%. The IBD 50, interestingly, lagged a little bit at 3.16, but it was up 46 out of 50 stocks. Now, my holdings going into the week were up 4.55. My buy watch was up 4.32. I was up on the week 15%. I'll show you in a little bit. And that's because I have leverage. I buy options, and I have a number of different things going on that can help me or hurt me depending on the direction of the market. And I am margined. Market Smith 250, IBD 85.85. The Friday weekend review were both over 7%. Now, this is that first list I mentioned. How many of these stocks do you own? I know TG probably owns more than I do because we talked about him. TG Watkins, he's friends with his dad, been to some educational programs with his father and TG. TG now works with John Carter, the Moxie Trader's got some great stuff. And, he's beat me this year, and I've had a pretty good year. Plug Power, one of my larger holdings, was up 67% this week. Riot Blockchain, I had a conversation with TG about a week ago, so I bought it. It was up 61% this week. Fuel Cell, I've been in this for a couple weeks, was up 44% this week. Sunrun, these are all stocks that I own going into this week. I took some profits as the week went on, 37.9, and so on and so forth. Now, you want to be worried that we're going crazy in this market? U.S. Steel was up 30% this week. Bloom Energy, probably one that will do well if under Biden's green energy, 27.48%. Everyone I've shown you, I've owned. Tesla, we got all excited by that. It was up 20%. Huge. And then some of the others down here. One of the stocks that I like this week, again, is Penn National Gaming, which was up 15.9%. Had a great week. If you don't own at least 5 of those, then I ask you, where are you getting the stocks that you're buying? Because if you'd watched my review last week, and I'm not saying that it's because of me, what came to the top? Renewable energy. What's been coming to the top for months? Renewable energy. Of the top 40 stocks here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 25% of the top stocks were renewable energy. They've been on my list for much more than 1 week. Sector strength. This is the Woody indicator here, and we could see we've eased off of red across the board. If I look at Q, which I think is a great way of looking at sectors, we can see here that over a 5-day period, we see lots of green, so most of the sectors were higher. Weakened going into the end of the week, and you can see 1-day and 2-day performance not so good. Over 10 days looks great. Over a month, so we've had a good period of time. Now, what's really interesting is on Friday, where we only had 3 sectors out of 11 positive, real estate and utilities. This was a risk-off day. Despite the fact I had a good day on Friday, and made a lot of money. This was a risk-off day, and you could see that these two things, which are defensive, came right to the top despite rising interest rates. Energy is like a frickin' ping pong ball, up and down and up and down, and it weakened into the end of the week. And you could see information technology has been pretty steady, as has healthcare. I also like to look at an extended FANG list to understand the market. This was put together by Ian years ago. Priceline is now called booking. I'd never change a slide, but I changed the index. The index gets updated all the time. And what do you see? You see it a melt up. Talk about going vertical. Maybe we get one more day in here, but I think this is the kind of thing that starts to make me nervous, and it's what things look like before a top. So I'll probably be putting together a leaders list over the weekend, extended leaders, and watching that list, because we are going to pause at some point. We don't go up to the moon straight, and I think we might be getting close. And you can see here on the Canaries, we are melting, and we are up at the top of the high jump bar. Know your news and earnings. Monday's pretty easy, although who knows what will come out of Washington. We got CPI on Tuesday. We got some claims on Thursday. Wednesday CPI, Thursday's claims, Friday PPI and retail sales. Earnings are just starting a new earnings season, and we'll be looking at the banks come Thursday and Friday. We're going to look for Delta, give us a hint about the airlines Thursday before the open. I think all the airlines are going to talk about the future is better than the past, but I can't believe they're going to have decent numbers. This is one of my favorite quotes that I came up with. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. And I think we all have a special sauce when it comes to that decision. Now, I'm listening to all these Robinhood traders. Hell, I'm listening to my son. And I watched my neighbor. And it's frothy. It's frothy. When my son, who could care less about stocks, that doesn't watch my videos, that's never bothered to take one of my educational programs, starts calling me up and talking about stocks like New Relic and is it too late to buy, I think that's akin to what people used to talk about in the 80s and 90s when we had taxis and the taxi cab drivers were day trading in between picking up, and they'd want to talk about the market. It is never, ever different this time. Maybe Bitcoin, maybe not. Here is the S&P 500. Here is 2020. Here is 1990. 30 years of data. This is monthly performance. These are the monthly moves. These are the percentages they move in that direction. Okay. And what do you see? Well, the S&P is up 72% of the months, and the average annual return is 8.6, and we had a 15% return this year. And if you look at this list, going back 30 years, 34.3, 26.4 are pretty phenomenal numbers. And I might add 37.7 minus, 23.6 minus are painful numbers. We can have big years, we can have bad years. We were down 33.92%, or 33.9% on March 23rd. We finished the year plus 16.2%. That tells me we had about a 50% reversal off the lows. That was unusual. Diamonds don't have as many years. I'm going back 22 years. And again, you can see similar ranges. The worst year, 2008, was down 33%. Those years will come again. The markets just don't go up like we've seen. The Qs have had some pretty good years. 2009, 47%, 37% in 2019, 45% in 2020. Go down here, 99. Some people say that this feels a lot like the bubble of 2000. Well, we had 79% up in 1999 on the Qs. And then the next 4 years, we were down double digits. Again, we need to be careful. You want to load up at bottoms of the market. You want to be taking profits on the way up as the market goes higher, and then you want to have cash for when this thing crashes, you can come back in. And it's going to come down. I don't know when it's going to come down. If I did, I'd be really rich. I just know that as we look at all of these, you see that markets just don't go straight up. Gold, you know, here's the moves in gold. Minus 28, plus 23. Good years, bad years, 32, 24, 26, 7, 9, and 10. Markets were bad in 7 and 8, and you could see gold was a good place to hide, perhaps. Now, the bonds, you know, I'm not sure I want to be deep in bonds now with interest rates going up. And you could see January to date, it's down 4.1%. But if you look at 27 and 28, 2007 and 8, when the markets were tough, bonds were up 26.5%. So bonds have their role, 23% in 2014. Not bad in 2019 and 2020, but if rates go up, bonds are coming down. Again, the markets don't go straight to the moon. Now, I was talking to TG, and he was really happy. He had $1 million day on Wednesday or Thursday. I know he's making a lot of money for people in his trading room. I had a good day this week, but I divvied my money up, and my aggressive account that I talk about with this video series is not. It's a small portion of my money. His trading account's a lot bigger than mine. He's probably 34 or younger. I'm unfortunately going to be 63 in a couple weeks. That's fine. I'm happy to be 63. It's not unfortunate. But I'm at a different point. I can't afford to ride down a 50% drawdown on my total net worth. I can afford it because I got enough, but I don't want to. So let's look back here, 2020. March 23rd lows. Okay, this was the performance of March. This is done on April 1st. These are the year to date as of April 1st. Here is the biggest drawdown in 2020. Now imagine if you just buy S&P 500 stocks, and imagine that you margin, so you get 1.5 times exposure. You were down 50% between February 20th and March 23rd. By April 1st, we'd seen extreme bounces. The key was you still had to have cash and know that it was time to get back in when it bounced. And you could see energy, the big loser, in the drawdown as well. There was no place to hide in stocks. Now, what should we expect after major pullbacks? So this is a chart that's looking at the major corrections ranked by the delta between the high and low in 52 weeks. All right. Highs versus the lows, the maximum drawdown. So that's minus 94. That tells me it was up 52% before it collapsed and ended down 42%. And the delta between the high and the low was that 94. So these were all very big drawdowns. Again, our drawdowns this year, not as bad, but 30 to 45. So clearly impressive. Next 3 months, 6 months, and 12 months. So if we look out a year from March, you've had some really phenomenal years after the Great Recession, but you've had some really ugly years too. There's no guarantee that this year has to go up. Now, why did I do this? Because I do think your age matters. If you are in your 60s or 70s, can you afford a 50% drawdown like you had in 2007? Most of you? Hell no. If you're 30, can you afford to be out of the market and miss another 50% move? Probably equally no. So I think that the closer you are to your retirement, even though I agree with TG, this market can go a lot higher, I think the risk is mounting day to day. And we are going to see corrections. It doesn't go up forever. I played chutes and ladders as a kid. Ian would talk about him and his little sister playing snakes and ladders. And the message was, you don't want to play snakes and ladders with your retirement money. I couldn't resist this either. Why is it so important to be your own guru? Well, for many of our scenarios, who cares more about your money than you do? Well, maybe my kids care because they want someday to get a big check when I kick the bucket. But no one cares more than you and perhaps in your spouse. So this was the market collapse of 2020. David Stockman, former Treasury head, or Fed head, I think Treasury head, March 4th said stocks heading not only for another 50% correction, but also a long L-shaped bottom rather than a V-shaped rebound which occurred after 2009. Oops, I guess he was wrong. Peter Schiff, extremely brutal in the inflation that's going to ravage the economy. March 25th, what inflation? John Hussman, I continue to expect the S&P to lose about 2/3 of its value. Jeff Gundlach thought the low would be taken out. George Soros, the worst bear market in his lifetime. Enough's enough. And these things were coming out as the market was recovering. Had you listened to these folks, you would have gone to cash at the bottom and still be in cash. Market thoughts. S&P, NASDAQ, and Dow closed at record highs on Friday despite a weak December employment report. The Russell set an intraday all-time high but closed lower. Markets have demonstrated remarkable resilience despite a fairly significant sell-off on Monday, perhaps related to tax gain harvesting and despite the news flow. News will continues to be ignored on this historic march higher. Capital calls for impeachment, weakening economy, new COVID variants, high rates of infection, hospitalizations and death, and a slow rollout of vaccine. The only good thing, it's unification because they're complaining in red states and they're complaining in blue states. So it doesn't matter what your politics are, you hate your governor with this. The market appears to be looking forward to additional stimulus, $2,000 checks, infrastructure, green energy buildouts, and those related stocks, some of which I mentioned already, having parabolic moves. Now, markets do not go up forever, yet with a continued accommodative Fed, the promise of fiscal stimuli, and ultimate victory over COVID, extended markets can become more extended and go higher. I would expect to continue to see rotation and profit taking. I had a surprising 15% move on the week, despite having bought puts on many positions in anticipation of taking profits. I added some cheap weekly options on Friday, as I mentioned, but I'm still long this market. There you can see year-to-dates, the Russell leads at 5.9. Be nimble, market melt-ups and climax runs on individual stocks do not usually end well. I don't plan on putting my money where my mouth is and showing you my account every day like I did last time. But, just to point out the craziness of what we're in, the first thing is I'm starting with a little bit over 3.150 in my trading account. But this is, I got at least $1.5 million are going out to pay taxes, more payments towards the house I'm building in Santa Fe and a few other things. So I'm not sure what my actual number is that I'll have in to start the year, although I could work at 3.1. And the only thing that I care to show you here is P&L to date over $500,000. And my point is that, this is not normal times. I wish it was normal times. Heck, I love how much I've been going up. Saturday, Friday, Thursday, Wednesday, Tuesday. Tuesday, I ended up making up all that I lost on Monday. A little bit up on Wednesday. Thursday was bananas in the market, and Friday was another good day. Now, the interesting thing was Wednesday was pretty good too, Wednesday would have been good too, except for the riots in DC, and my portfolio dropped a couple 100,000 while they were running around like crazy people. It's, there are things that I do that help me or will hurt me when the market rolls over if I'm not careful. I use options more than stock, that's leverage. I use portfolio margin, that's leverage. But I'm a top-down guy, and I go all in industry groups that are leading, which is why I have so many renewable energy stocks. Yes, I could have just bought big positions in one of them, but I like to dilute out my individual name risk by getting a couple in the group. That is not what I learned from O'Neill. If we look at Major Markets Plus and HGSI, top-down analysis, these are 30 different indexes that give me a sense of what's going on in the market. The first thing is, if I look at 5-day performance, gas was up 9.4% and oil was up 7.3%. Over 5 days, small caps 6.4%, Russell 5.9%, semis 5%, mid caps 4.8%, IBD 50 ETF 4.6%. Well, it was a great week to be a growth investor when you see those types of numbers. What really lagged was volatility, which is good if you're long. Gold and silver, TLT bonds was low as well. And the dollar on the week was relatively flat. Let's take a look at some of these major indexes. We'll start with the S&P 500. Now, I made one change in this chart that a couple changes I'm going to tell you about. And yes, someday I will actually send in a new add-on. But remember, I don't charge you for anything. I don't have a couple $100 a year fee for the support that I give. I think Ron Brown does a phenomenal job of what he does. And since I don't get paid, I don't have any deadlines to get things done. I do this because I want to help people. And I haven't really changed that much. And I'd rather you learn how to make your own charts. And maybe I'll spend some time doing that instead of just making another add-on. So I'm looking at a weekly on the right, daily on the left. Now, one thing, I got a call from my neighbor on Friday, all excited, or Thursday, whenever, that we had a eureka in the market. And I looked at my charts and I said, I don't see a eureka. Why not? So I said, you know what? I know why. So here's what happens. The eureka is the follow-through day for HGSI. And we have two forms of the eureka. It's advanced decline ratio, advanced decline volume ratio, and ARMS index. You can pick the index. Well, I was using the NYSE, and the NYSE did not have a eureka. So the NASDAQ had a eureka. So now what I've done is I created two windows with eurekas and phoenixes. One on top, that's the NASDAQ, and one that is the NYSE. Just like on the Hindenburg, if one looks at my Hindenburg, and I think I have that in what's distributed, I have two different Hindenburg signals, one using all NYSE index from HGSI, and one using, whoops, I hit that at the same time, and one using bar chart market indexes. Something has changed over time where one index vendor works better than the other, but in the past it was the other way around. So enough of that. Other thing I did is I put down here the name of the instrument so I don't have to keep looking up here, and how far it is away from its 10-day moving average, because I've been listening to IBD Live and they talk a lot about extension from the 10-day moving average on indexes, and I'm just curious if that can give me any important information on stocks as well. So S&P 500, as we talked about, looks like it's breaking out here. It's at all-time highs. It's only 2.1% above the 10-day moving average. If I'm a betting person, it goes higher. The chandelier's underneath the 50. The 200-day moving average, the 17, is right below the price. It had a mobile breakout from a squeeze a couple days ago, a new John Person buy signal, a Eureka, which was a buy signal on the market. That's very bullish, except, okay, and this was a message I had for Kathy. I'll tell you the same message. When you are up, $74.5% in the market from the lows. Geez, that's not amazing or what? When you see a Eureka, it's probably exuberance and maybe more bothersome than a new buy day. That's the S&P 500. Dow Jones again, looking at HGSI breaking out. I'm not going to spend much time on these. We've already seen them. And I know you're probably wondering why I do this. Well, I do the same thing every night, so I just repeat what I'm doing. Russell closed below it open. You can see how it traded down during the day, came back up. That's a little bothersome and different than the others, and the NASDAQ looks great. If you're a growth stock investor, then the IBD 50 ETF is for you. And look how beautiful this is. All-time highs, breakout on Friday, except it closed with a doji. And as I was talking with Kathy, what that means to me is that's an indecision day. It doesn't mean a reversal. It could be a reversal. It's 50-50 day, and it usually trades in the direction of the open. So we'll see what happens. However, if we open up here and close like that, that would be a low close doji and tell me that I'm probably going to really take profits. So I'm going to be watching what happens with this on Monday. If we look at biotech, has been strong. Just going through some of my favorite things here before I move on. Biotech, doing wonderful. Trump did some very tough rules for drug and biotech companies on pricing. Most favored neighbor pricing, and it got shut down by the courts, or at least delayed. New regime, probably that goes away. Semiconductor stocks. Reversal day on Friday from new highs. We'll have to see what happens here. Talked about the dollar already being weak, and you could see it's starting to perhaps find the bottom here. Look at the relative strength on the weekly basis with the person market catcher and on the daily basis, getting less bad or positive compared to a falling stock price. Again, that could be signaling a reversal. The VIX, it's hard to even see with this, so it's hard to talk much about it, just to say it's low and continues to get lower. And gold was doing great, and then gold just took a dump on Friday. The dollar got stronger. I guess risk is lower in the market, and gold sold off, as did gold miners. So if you have nugget and things like that, you're at kind of an important point at the 200-day moving average, and silver as well. And then I mentioned before FANG. I like to look at the microsectors, FANG plus ETN, and all-time highs. What a beautiful chart. Imagine if you just put all your money in this. I think it's too risky to put all your money in that, but boy, that would have worked great. Next thing I do with HGSI, and where I think the real power of HGSI is I want to look at what industry groups are leading, because since I'm a top-down guy, I want to be buying stocks in the top industry groups. So I'm going to go to 7 in major industry groups, highlight it, I'm going to hit the warehouse view, and I should see about 174, which I do. I'm going to go to 2-day force. So these are the things with 2-day momentum up. I have 69. With 2-day momentum down, I have 19. That's decisively bullish. I look in here, publishing, commercial vehicles, healthcare, home building, food and drug stores. That's interesting. They were strong this week. Oil, gas, cruise lines. All right. 5-day down, only 13 stocks, a little bit more intermediate duration. 5-day up, 82. So this market's positive. So I'm going to look to the bullish side. And what I typically do on a nightly basis is I look at a number of my favorite scans, and then I do this top-down analysis. So if I highlight renewable energy and then I right-click on the mouse, and then left-click where it says change to index group, I now list the stocks. I typically only buy things that are performing better than their individual index. Look at the 5-day performance in this industry group. Holy shamoly. How many of these do you own or did you own? Because it might be good to have been did you, because they're getting frothy. Here is Plug Power. You know, the funny thing is, Plug Power was pretty extended already here. And then Thursday, we woke up to hear that somebody put a South Korean company put a $1.5 billion investment in them. Let's look at what their market cap is. 22 billion. So that's a 6-7% investment. It's at the high jump bar. Clearly, you expect things to reverse from here. They always do, but they don't have to do it tomorrow. But I think it's high risk. I sold some calls against mine and took some profits out already. And you could see exuberance here, a Mobo breakout, a new person buy, the Eureka on the market, and then a Kahuna. Now, there are times to buy. This is when you buy Plug Power, right here. Okay? And those that have been here know, what am I looking for? I'm looking for a confluence of buy signals on a pullback to the 50. And the best part is an uptrending 50, because I don't need to be in something for 7 years before it moves. So here's a pullback to the 50. That arrow there is a new John Person buy signal, a Mobo breakout. This here is a pocket pivot, and then a couple of Kahunas in a row. That was a buy signal. Here was a buy signal. Here was a great buy signal with a Bible gap up. Hard to buy a $5 stock. Hard to buy a $5 stock that months later is a $57 stock too. Wow. Let me say it again. Wow. Fuel cell energy, same story. I bought this move here, and then there was another opportunity here. Here's where I took my bigger position on the pullback to the 17. This thing's gone crazy, a hydrogen fuel play. It also went up on the plug. I mean, these things are all extended. You wonder how long. You could see even this one on Friday did have an intraday reversal here. This is what you expect to happen. You expect them to come back and maybe run again. Again, now you have an uptrending moving averages, unlike the prior one where the pullbacks were to the 50 down here. Now in this new move, it never gets below the 17-day moving average. Sunrun, I have this one as well. Why? Why not? Breakouts off the 50-day moving average, and we could go through the whole list, but I don't have all night, and neither do you. Next group, if I right-click back, automobile index, it's 2 stocks, Tesla and NIO. I just wonder what happens to the S&P 500 where Tesla is such a big component when it finally decides it's had enough of a run. It is 20% above its 10-day moving average. It's 70% to the high jump. So it could still run a little bit longer, but a big, hopefully not exhaustion gap on Friday. I know in other boards, a lot of people are talking about taking profits on it. Same story. Mobile breakout from a squeeze, a move off of the 50, a new John Person buy signal, pocket pivots, and kahunas. I look for that every day. NIO. Whoops, I didn't do that right. Hold on a second. Looks like Sunrun breaking out again. This one has been another great story. Pullbacks to the 50, confluence of signals. I buy the stock. Been doing this for years. This is where my returns come that I show you. Next group, food production. There's one stock here. It's Future FinTech Group. Who would have thought Future FinTech Group is about organic foods? I don't know what to do here. It looks very interesting, doesn't it? Big move already. Don't know enough about it. It looks to me like a hype story. Other financial services. These are, I think, in blockchain, Marathon Patent Group. Wow. High jump 100%, 80% above the 10-day DMA. If you own this, you got to be taking profits. If you want to buy it here, you didn't hear it from me. I think it's crazy. Way extended. But then again, so are my solar stocks. Other hardware. So 3D Systems must have had good earnings because 3D Systems had a big Bible gap up on Thursday. And then I have this Applied DNA Sciences. I got to learn more about this one. Don't know anything about it. I don't even know what, if it's a healthcare, it's not a healthcare stock. Well, maybe it's a 3D digital in healthcare. Who knows? All I know is that's really interesting looking to me. So I'm going to do my research on this stock. Digimark pullback doesn't look that exciting. All right, Fleer is a takeout. Biotech. Biotech looks interesting. Now, I don't know what to do with, well, I'm gonna look at, with one of them, but here's Chimerix, big Bible gap up, hard to chase. If you own it already, God bless you. Still a cheap stock. Do your research. You want to make sure that you go down in the order of the list, not alphabetical. So sometimes you got to hit it harder. Arcturus, big pullback to 200 on news. I wouldn't be playing this one right now. CRISPR, this is in the DNA editing. This, Editas, and others just had a huge run. Again, how do you buy these things up here? You buy them down here. 2 kahunas in a row, breakout above the 50. That's when you buy this, not today. Regeneron, this one's got me wondering. Great company, lots of products on the market, a lot of partnerships. You got a chance to buy it here real cheap. And let me show you what I really like about this one. This is what I really like about this. Price went sideways. Person market catcher went up. There's a bullish convergence there. Got a new person buy signal, 2 kahunas in a row. Mobile breakout from a squeeze. What don't I like about it? Lots of overhead supply and resistance. I like Regeneron here. Worth playing with. Fate. Amgen, you know, here's where I don't know what to do. On one hand, it's breaking above its moving averages. There's a lot of white sky up here. It's still got some overhead supply down here. It's got the person buy signal, person market catcher is bullish convergence, had kahunas. But on the other hand, it's gone nowhere for 6 months when the market's gone great. So I'm going to skip. I don't have forever to wait here. Editas, similar to CRISPR, big run. I wouldn't be chasing it here. You know, what I've been doing and what I told Kathy to do is just buy a lot of LABU and be in and out and use this to time your biotech purchases. And it's had a big run this year and may be getting ready to run again. JP Morgan starts Monday, a healthcare conference, and in some years that runs the market. I also like Insight here. Insight has got a great drug on the market for a blood disorder. Couple kahunas in a row, that's a sign to me. New person buy, mobile breakup from a squeeze, took out its 200. Bullish convergence down here. Also a high close doji on the weekly, which is a very bullish signal. I think Insight looks interesting. Now, typically I'll go through all 10, but I'm getting tired. You're probably getting tired of listening to me. Let me show you some of the secrets of HGSI. How many of you spend time on the designer? You should. Let me show you what we got in here. We have smart groups. We have smart people. You have to check off, manage group subscriptions, the ones that you want to follow. Okay. So these are scans that I put together, Gil Morales put together, Ian Woodward, God bless him, and Ron Brown, Morpheus Trading Group. These are done every time you do a full update. Intraday, if you're using a data set like Thinkorswim, end of day, and you'll get things like strong earnings per share relative strength near 52-week high. There's some great stocks in there. What was the one? Here it is. This was the one that did so well this past week. Leaders, raw relative strength, raw rank group combo. So you have a series of bullish and bearish scans that are done for you every time. There's a hidden gem under HGSI custom groups. Go into HGSI top 50, most recent. These are stocks that were in the most recent top 50. And where they're finding these is they're pulling them out of the stocks that made it to the highest number of bullish scans. Here's one of my stocks that I'm looking at. I actually bought on Friday, Shopify. I've been in and out of this one over the last few years. Why did I like it? A sideways move, a new person buy signal. On Thursday here, you had a kahuna and a mobile breakout on Friday. If this market goes up again this week, I'm looking for Shopify to follow. Look at the earnings per share coming in this quarter. So a lot of your winners are going to be in this group here. Now, there's this thing here called user smart groups. And Ron Brown puts out a lot of them. I took some of my favorite scans that are in the program, and you just pull them over here. Chris Tuck, he married one of my best friend's daughter. Broke a lot of men's hearts when he did that. He's a money manager, and one day he sent me a scan. He says, I really like this scan. What do you think? Well, it's one of my go-to scans. And this way, by moving it into user smart groups, it updates automatically for me every time I do an update. And let me tell you, let's just look at these real quick. Tell me if these aren't interesting looking stocks. Chegg Group, high base breaking out here. New person buy signal, pocket pivot, kahuna, I already own some. Fastenal, industrial play. Mobile breakout from a squeeze, broke out above the 17. 3 or 4 kahunas in a row. That's on my buy watch list. Goodyear Tire and Rubber, I should have bought it last week. It was on my list. It broke out on Friday. Good earnings per share coming in, pays a small dividend. National Storage Affiliate, it's kind of a loosey chart, but breaking out here off the 50. Mobile breakout with a squeeze, a new person buy signal, pocket pivot, kahunas, and bullish convergence. And it's got a weekly high close doji. I don't know anything about LASR, nor Nomad Foods, Primo Water, Sohu. But these are good-looking stocks. Viva, this is on my buy watch list. Big uptrend, sideways move, and a breakout off the 50. A couple of kahunas, pocket pivots, bullish convergence, job person buy signal, mobile breakout from a squeeze. Who knows what this stock is going to do? But my biggest winners start like this. Bitchy Properties, a little bit more boring, but also one that I like. 4.9% dividend, great earnings per share growth, exhibiting all my favorite signals on the right side of the chart. I want things on the right side of the chart that are telling me what to do, and so I have those scans built in. Bunch from Ron Brown and others as well. So I think this program's phenomenal. Let me show you my buy watch here. And these are the stocks that I'm going to be watching, and then I'll tell you a few comments about a couple of them, and then I'm going to say goodbye. Go to this list here and look at industry groups. Application software, we already talked about Viva. Biotech, this is one I don't know what to do with. I love this pattern. It's breaking out here, mobile breakout from a squeeze. Bunch of kahunas. It's just been going sideways for too long, so I don't trust it. I'm going to watch it, and I'm going to define watch in a few seconds. There's Insight, Regeneron. Penn National Gaming. I already have a big position here. I'm talking my book. I've been in Penn National Gaming for a while. I have it in 2 accounts, 2 positions in it. I got a bunch of Penn, just showing that I've got a bunch of positions. I've got 96,000 net profit in one of my positions and 33,000 in the other. So I've got puts on it that I bought just so I don't worry about getting that money out because I'm going to have to pay some taxes. But it seemed to me like it was going higher. So I may add to my positions and buy some further month out calls. Great uptrend. Why'd I get in it? You tell me. What a great place to enter this stock. Beautiful run. Yes, I hold it through pullbacks. Big deal. I'm a long-term guy. It just looks to me like it wants to go again. There's Chegg. Etsy's another one I've been in. Pullback. It just looks to me like it's getting ready to pop again. Look at the earnings per share growth. A number of internet-based services. There's Shopify. Trade Desk. Leader. Falling on hard times. Does it look like it's getting ready to go again? I think it might. Danaher, a life science thing, just broke out on Wednesday. That was the day to buy. But again, mobile breakout from a squeeze, new person buy signal, pocket pivots, kahunas, and positive convergence on the relative strength. You know, a lot of times I'll jump up into MarketSmith and I'll just take a look in there. See, I was looking at Goodyear earlier. So it's right below its pivot point. Pattern recognition has picked up a cup. Great earnings. And then I learned to look over here, and you could see in some of the top IBD mutual funds, it's got ownership in 4 of them. So I think Danaher looks interesting. Look at this weekly chart. Is this tight or what? Just looks very interesting right there. Novacure is one that I love in healthcare. I've been in the stock for a while. Looks like it's getting ready to run again. We've talked about it back here and at other times. Tandem Diabetes, old name, pulled back to the 200. Doesn't this look like it's ready to go? It's broke above the 50, mobile breakout from a squeeze, a new person buy signal, kahunas, positive convergence. I'm a broken record, folks. I buy the same story over and over and over again. Horizon, I'm out of this now, but I'm looking to get back in. Big uptrend, pullback, had some, I guess, some fundamental issues, but it looks like it's broken out and running again. So I'm going to look at Horizon. And then the other one that was sitting there was NVIDIA. I mean, when is this going to break out? I don't think I touch it until it breaks above its chandelier, but this thing has been a leader. I'm watching it closely. And American Waterworks is another one with a nice pattern. Looks like it's getting ready to break out as well. Now, you're going to look at me, or you're probably thinking 55 stocks. Does a kid ever show up? Well, I'm not a kid anymore. Does the old man ever show up? Shut up. Yes, I'm going to shut up now. Here's how I watch. Thinkorswim, Market Watch. Find my buy watch. Boom. There's the stocks. Here is a kind of like Vantage Point indicator. Those are all buys. This is my short-term buy-sell indicator, my kahunas, my high-close, low-close dojis, pocket pivots, Bible gap-ups, Dr. K's wonderful tools, and then the earnings per share date. I look for new green things to pop up. Okay. I watch these closely. In TradeStation, what I do is if you have an IBD Live subscription, they've got this really great asset where you can download stock lists every day that they've curated. So they have the ready list from Friday, which were stocks that they thought were ready to go. I owned a bunch of these, so I was happy. And then they had their IBD Live watch list, which is a bigger list. So I take these two lists, take the Friday's Weekend Review, the IBD 50, the MarketSmith 250, Mike Scott's Focus 3 stocks. I add to them the ones that I thought were potential buys and my current holdings, and I create what's called a combo group. That combo group I will dump into TradeStation, and then I've got a couple of these going on different machines. And if I find my sonar, here's sonar, I'm able to scan it for various signals during the day. These are Q and HGSI signals that I've got built in here, some Dr. K signals, and then on my other machine, I will have John Person signals, and I'm able to search for these during the day, looking for stocks that meet my buy criteria. I do most of my trading at night, and by that I mean I identify a stock, I put in conditional orders, and during the day I'm mostly just managing my positions and looking at new signals. On that note, thanks for watching. Please hit the subscribe button and the up thumb if you like this. Send me comments, and we'll see. As long as I keep getting comments, I'll keep doing this. Take care, everybody, and good night.